Hello, I am Pat Brockman from Munich Re's Special Case Unit. In underwriting, we often use an adjusted income approach when calculating earnings when valuing a company. This training video will provide insight on what EBITDA is and how to calculate it when it's not specifically listed on the financial statements. What is EBITDA? It stands for earnings before interest, taxes, depreciation, and amortization, and is essentially earnings, or net income, with interest, taxes, depreciation, and amortization added back to it. It is an approximate measure of a company's operating cash flow based on the financial information from the company's income statement. It can be useful in comparing companies within and across industries, especially in the technology sector. It also can be used to analyze and compare profitability between companies since it eliminates the effects of financing and accounting decisions. It is noted to be a useful measure for large companies with significant assets and/or debt financing. It is rarely a useful evaluation for small companies with no significant loans. In most cases, EBITDA is not listed on the income statement. It needs to be calculated. Since EBITDA often needs to be calculated manually, we need to know what items from the income statement are needed to calculate it. This slide contains an income statement in which EBITDA is not listed. In order to calculate EBITDA for this company, you first need to locate the net income figure, which is approximately $1.7 million. Next, find the interest expense, which is highlighted on this slide, and add it to the net income amount. If applicable, add taxes back in. However, there are no taxes listed on this income statement due to the type of business. You should then locate depreciation and amortization expenses, also highlighted on this slide, and add these amounts to the net income interest expense figure. Once all of these amounts are added back to the net income figure, we come up with an EBITDA of approximately $6 million for this company. After the EBITDA is calculated, an underwriter can use it and apply the appropriate multiplier to determine the value of a company for underwriting purposes. Hopefully, this will help you quickly calculate EBITDA on cases in which this figure is not provided.